Steve Mulroy, great to have you with us. VACo VML Finance here today to talk a little bit about OPEB and what the OPEB Trust is. And Steve, as we talk about OPEB, that's an acronym. Tell me what OPEB means.
Dean, thank you for having me today. I really appreciate the opportunity, and would love to talk about the OPEB Trust. OPEB is an acronym, as you say. It stands for Other Post-Employment Benefits. So essentially, it's other than pensions, it's benefits that employers offer their retirees. So primarily, it deals with health care for retirees. There are some other ancillary services or benefits, but that's the primary benefit that it covers. And GASB, the Governmental Accounting Standards Boards, more than a decade ago, created rules that OPEB had to be accounted for on a on an accrual basis as opposed to a cash funding basis. So that really was the thrust behind developing and creating the Pooled OPEB Trust.
Can you explain a little bit about the trust as an investment vehicle for localities?
Sure. Most localities, especially the larger, rated localities, have they provide other post-employment benefits to their retirees, and they have the plan on each locality has the plan. The Pooled OPEB Trust that the VACo VML Pooled OPEB Trust offers is an investment vehicle where monies are being set aside to offset those benefits that are due in the future at some point. So it really is just an investment vehicle. It is a diverse portfolio where we're striving to achieve a certain stated rate of return for participants.
Steve, the OPEB, the trust, it's more long-term investment, isn't it? I know that you all have with your VIP program, the Virginia, the investment pool program, it's short-term. Isn't this more long-term for localities?
Yes, that great question. The OPEB Trust, it really it's set up like a long-term pension fund where, in addition to being diverse, it really strives to generate positive returns over 10 plus years. So it really is looking out longer term to match the liabilities. These are longer term liabilities that they're funding. So it really is set up to kind of invest through market cycles over 10 plus years. So it is definitely a very longer term. And it's one of the areas that local governments, counties are allowed in the state code to invest longer term.
Steve, what's the advantage of joining a pool versus a locality establishing their own trust fund?
I think one of the benefits that we bring to the table is economies of scale. A lot of the administrative burden is handled and shared, by the trust, and this trust has VMLVACoFinance as the staff. Those costs can be shared and split out amongst all the participants. Another economies of scale benefit is because of the scale, the size of the investments. Right now, the Pooled OPEB Trust has $1.7 billion invested. We're able to get really competitive pricing on fund managers, on custodial services, on investment consultants. So all the professional services that are brought to bear to bring a successful trust investment pool about, we're able to get them at very competitive price points because of the size. So that's one of the main benefits. I think the other benefit is just the level of expertise that we're able to bring. We're able to hire some of the best managers in individual strategies for these long-term types of investments that a smaller investor would not necessarily have access to. So I'd say, of the benefits that the Pooled OPEB Trust brings, those are two of the more prominent ones, is the access to high quality managers and economies of scale.
Steve, tell me a little bit about the performance of the pool of the trust.
Yeah,
Has it done well, or-
the Pooled OPEB Trust has two portfolios. One targets a rate of return of 7.5%. The other targets a rate of return of 6%. The 6% target is a little more conservative. The intent being that it's going to be a little less volatile. Over the long term, the trust was established in 2008. The trust has consistently performed very strongly, and in fact, in the fiscal year that just ended, June 30th, the portfolio one had a 30% rate of return for the 12-month period that ended in June. The portfolio two had a 20.6% rate of return, for that 1 year period. So performance has been very strong, and I think a big part of that is the headwinds of the equity markets. But we do have a diverse portfolio with other different asset classes that help kind of dampen volatility and generate the kind of healthy returns that we're seeing.
Steve, it's great to have this investment option for Virginia counties, and we really thank you at VACo VML Finance for your all's partnership with Virginia counties and with VACo. And thank you for being with me today.
Dean, thank you as well. I really appreciate the opportunity and really appreciate VACo's support on this program.
Thank you.